Welcome. So, if you're someone who's spent, countless hours staring at charts, you've memorized all the patterns, but you're still struggling to find that consistent profit, well, this one is definitely for you. We are not going to look at some new secret indicator today, no. Instead, we are going to dive deep into the 3 real fundamental reasons why so many traders just get stuck in that loop of breaking even, or, worse. And it all starts where pretty much everyone begins.
This is it, right? This is ground zero for most of us. We're told we have to learn the language of candlesticks, the dojis, the hammers, those big engulfing patterns. And we believe that if we just get fluent in this language, we'll unlock the market secrets and know exactly what it's going to do next.
And yeah, every single one of these candles tells a little story. It's like a visual snapshot of the battle between the buyers and the sellers in that one moment. The big fat part, the body, that shows you who won that round. And those little wicks or shadows, that's all the territory they fought over to get there.
And the promise that comes with this is so seductive, isn't it? You see these guides and cheat sheets everywhere, ranking patterns by their so-called accuracy, making you think that if you can just spot that perfect Morningstar pattern, a huge profitable reversal is practically in the bag.
But here's the reality check. When you start digging into the actual academic research, a completely different story pops up. Study after study finds that in isolation, the predictive power of these patterns is basically no better than a coin flip. And that right there is our first big clue. If the data says these patterns don't really work on their own, then what if being profitable isn't about the patterns at all?
And listen, this isn't just some theory from an ivory tower. This skepticism is backed by cold, hard numbers from the industry itself. This number? That's from a real disclaimer from a major broker. A staggering 71% of their retail clients lose money. That's not a few people having a bad week. That is the overwhelming majority. So, why? And that leads us right to the absolute core question of this whole explainer. If just knowing the patterns was all it took, that 71% number would be completely flipped around, right? So if it's not about missing some secret magical pattern, what are the real underlying reasons that traders just can't get ahead?
Okay, reason number 1. This is the biggest and most fundamental mistake, and honestly, a lot of traders don't even realize they're making it. You think you have a strategy, you think you have a system, an edge. But what you really have is just hope, dressed up to look like an edge.
All right, let's make this super clear. Take a look at Tom and Sarah here. Now on the surface, they might look like they're doing the same thing, but their approach, it's just worlds apart. Tom thinks his system works. He's running on gut feelings and guesswork. Sarah, though, she operates on nothing but hard data. She knows her exact metrics, down to the decimal, because she's actually done the work to track everything.
And that's the difference, right there. A real edge isn't some pattern you found in a book. It's not a good feeling you get when a setup looks perfect. No, a true edge is proven with math. Your math from your trades executed in a live market. Until you have that data, you're not trading, you're just hoping.
Now look at this list of questions. They seem pretty simple, don't they? But I want you to be totally honest with yourself. Can you answer every single one of these with a precise, hard number? If you have to pause or if you find yourself guessing in any of them, then you're Tom the Hope Trader. And let me tell you, hope is the single most expensive strategy in the market.
And please be so careful of the backtesting trap. It is so easy to scroll back on a chart and see all the amazing winning trades your system would have caught. But that's because you already know the outcome. That's hindsight bias. In the live market, that perfect setup looks exactly like 10 others that failed miserably. Backtesting is a good start, but it absolutely does not prove you have an edge. Only live execution and real data can do that.
Okay, on to reason number 2. This one is way more insidious because it hides behind this illusion of discipline. You tell yourself, I'm disciplined, I risk a consistent 1% on every trade. But in reality, your emotions are secretly pulling the strings on your position size, and it is absolutely destroying your profitability.
Let's meet Lisa and Mark. Now, they both have the exact same plan, risk a fixed 1%. But Lisa's execution is totally driven by her feelings. After a big win, she's feeling invincible, so she gambles a little more. After a loss, she's scared, so she shrinks her risk way down. Mark, on the other hand, is basically a robot, in the best way possible. His plan is 1%, his execution is 1%, every single time. His feelings have zero impact on his position size.
Do you see what's happening to Lisa here? It's a disaster. Her wins are all happening when she's risking a small amount. But her biggest losses? They happen when she's overconfident and sized up. Even if her strategy actually has a positive edge, her emotional sizing is creating a mathematical death spiral. She's systematically winning small and losing big.
And this is the critical point I really want you to get. Every single time you tweak your risk based on how you feel, you're not trading your system anymore. You've thrown it out the window. You're now trading a brand new, completely untested system that's based entirely on your emotions. And that system, it has absolutely no statistical edge.
All right, let's get to reason number 3. And this one is maybe the most profound of all. Your strategy might actually be profitable. It could even have a proven mathematical edge, but it still won't work if it's not the right strategy for you. This is about a fundamental mismatch between what the strategy demands and who you are as a person.
This quote is just so powerful. Most traders think, oh, I just need more discipline. But you can't use willpower to force yourself to be someone you're not, day after day after day. That friction, that internal battle will eventually cause you to break. The real solution isn't to change your brain to fit the strategy. It's to find a strategy that already fits your brain.
I mean, think about this for a second. We've got Alex. He's naturally impulsive. He wants action. But he's trying to trade a strategy that requires like Zen master levels of patience. So what happens? He's constantly jumping the gun. And then you have Sarah. She craves certainty, but she's trading this wild breakout strategy where you have to hold on through these terrifying pullbacks. So she bails out way too soon. They are both guaranteeing they'll fail because they're in a constant state of psychological war with themselves.
So again, you have to be honest with yourself here. Does your current strategy make you feel constantly impatient? Does it keep you up at night with anxiety? Does a completely normal drawdown make you feel sick to your stomach? If you answered yes to any of those, you are in a constant battle with yourself. And in the market, let me be clear, the person who is fighting themselves always loses. So the big question, how do we fix all this? The good news is it's not about finding some new magic indicator. It's about completely rebuilding your foundation from the ground up. So let's look at the actual blueprint for building a real, sustainable edge in your trading. This 3-step blueprint changes everything. It shifts your focus from just hunting for signals to actually building a professional process. First, you stop guessing, and you get hard data on just one strategy. Second, you protect that strategy's mathematical edge with ruthless mechanical consistency in your risk. And third, you make sure the strategy you've chosen actually fits the person who has to sit there and execute it day in and day out. At the end of the day, the path to profitability, it's not found on your charts. It's found in your process. The real work isn't about learning another candlestick pattern. The real work is fixing these 3 foundational flaws. Replacing hope with cold, hard data, removing your emotions from your position sizing, and matching your strategy to your own mind. That right there is the only thing that separates the permanent student from the consistently profitable trader. So the final question is pretty simple. Are you ready to stop guessing and start building?